Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, June 13th, and I want to give a little shout out to my sister. Happy birthday, Kara. Happy birthday. And I hope you all had a wonderful weekend. It was pretty nice around here in the South Bay here. And not much on economic news releases. Nothing scheduled for today. We do have a volatile week. Just happens to be today's the only day off that they have. Now the stock market kind of went upwards. It was kind of started up with kind of optimistic week, and then now it's pulled back quite a bit. So it's almost at par level. Some of them are like SP's down a little bit, and Dow's up slightly, and almost barely at par. So they pulled back, and the big thing was basically the dollar kind of fell against the euro. There's still concerns with the Greece. They're almost basically it's inevitable for them to default on their debt restructure. So it went from like S&P went from a B to like a triple C rating. So that's basically where they're at with that. But the dollar kind of weakened against the euro through some other news that came in. Uh, that's really about it today on the economics, on the headline news and stuff. So let's go ahead and take a look here at the bond market and see where interest rates are moving towards.
All right, so here's the bond market, and as you see, Friday we kind of left off. We did close a gap, but really didn't move anywhere. We didn't go down too much, but we didn't go up more. Today we did start down lower today, primarily due to the stock market. As we said previously, the stock market started up much higher and then kind of came back, and some of that money's gone back into the bond market. So we're kind of gone upwards. We've been kind of trading, kind of going the sideways patterns. We kind of see here between par 80 and 101.60, and it looks like we're kind of going there. But with the volatility of this week, I would expect this to kind of maybe break out of a little bit more, especially because we're talking about retail. So signs of where the economy, if it's going to slow down, is what we're kind of have been kind of starting to see a little bit of inflation. We had the CPI report coming out this week, so those are all big indicators. So far the core CPI or core inflation's been pretty good. The headline's been a little bit higher than what we all like to do, but as the Fed has said, it's transitory. That will ease up probably towards end of summer to early fall. So we'll see. But right now, rates are a little bit or showing some improvement here, and but we're probably about where we left off on Friday. So we're probably about the same as Friday, especially depending on when the lender gave out the pricing. So if they gave out pricing a lot earlier, especially on the East Coast, they're probably having a pricing for the better right now. Those on the West Coast here probably are getting about the same, are probably remaining the same as what Friday's pricing was. All right, folks, have a great day.
And folks, I'm also a loan officer. If you're looking for a mortgage in the state of California, I can also help assist you. You can check out my other websites here at obviously at Mike's Daily Market Report and MikeBjork.com, even CaliforniaMortgageTips.com and the Mike's Homebuyer University.com. I have some great resources there. But feel free to give me a call at 310-694-3544. I can do refinances, and I also do purchases. So I can help you get pre-approved to buy that next home here. So thank you, and keep me in mind.